crude. Crude oil has been generally sliding down for over a year already, and even this ETN exchange traded note with the ticker oil has been delisted recently on the 7th or 8th of June. So what are the prospects for crude oil? Let's have a look at the details. In the intermediate to longer term, I am bullish on energy. We are going to need more energy. That will generally push the crude oil prices higher. However, in the shorter term, oil might be still somewhat, let's say, slippery. Looking at history, crude oil cycles, we're talking about intermediate cycles, last for around 5 to 6 months. Since the middle of 2017, crude oil cycles lasted for an average of 161 days. The ongoing cycle is now only 92 days long. So it's not extremely likely that we have already finished cycle over here on the 12th of June. That would give us the shortest cycle in the last 6 years. So in the short term, what I expect on crude oil is perhaps another poke above this declining 50-day moving average before a drop down into the end of this ongoing intermediate cycle. Perhaps with the cycle lasting somewhere closer to an average, maybe around 4 to 5 months. That's our short-term view. In the medium to longer-term view though, once this cycle low is out of the way, crude oil is going to enter a new cycle. We're going to see an intermediate cycle rally, which will likely push at least up to the 200-day moving average and perhaps even beyond that. Although that remains to be seen. Let's have a look at some more signs of an upcoming eventual strength in crude oil. Looking at this optimism index, we see that optics over the last couple of months during the declining phase of this ongoing cycle in crude oil has dropped from all the way above 50 to the most recent low at around 33. That's low enough for a cycle low, so perhaps we have seen the cycle low and we're going to see a cycle rally relatively soon. But as I've just mentioned, it's not extremely likely. Maybe a short-term bounce up in crude oil to test that 50-day moving average before slipping back down into a more recognizable cycle low. But in either case, in the intermediate to long term, the optimism on the market is now quite depressed. So we are getting pretty close to that cycle low. Looking at this oil inventory as a percentage of the last 5-year average, we see again that over the last couple of months, again within the ongoing declining phase of the cycle, crude oil inventories have declined from around 10% over the 5-year average to 0% right now. So it looks like these excesses in inventory that are generally pressuring the price down have been worked out over the last couple of months. And looking historically, this is the last 20 years or so outside of this period of oil glut between 2014 and 2017. It's not common that crude oil inventories rise above, say, 17% of the 5-year average. So the recent inventories at around 10% is a pretty significant level, which again has already been worked out over the last few weeks. And looking at these oil inventories with the SPR, the Strategic Petroleum Reserve. Again, if you include that SPR, the oil inventories are at a 22-year low, all the way since the low in 2001. That's mainly due to the SPR, of course, being cut in half in the last 3 years or so. So again, the stockpiles, the inventories have been declining recently, while at the same time the crude oil price declined over the last year by around 44%. So in the longer term view, I do generally expect crude oil to trend higher, maybe giving us again another sort of a cup formation over the next few years. But that's again medium to longer term view. Coming back to some of the risks in the shorter term though, the stock market is somewhat overheated. This is the optimism index on the stock market. It's currently at the level of 80. That's pretty high. That's usually where intermediate cycle tops do take place. And yes, if you look at 2020, 2021, optics has stayed around the level of 80 for quite a while, with the stock market chugging higher and higher. But remember, the Fed was much more accommodative back then. So if the stock market decides to cool down, say, over the next several weeks, that might align with our expectations for crude oil to drop one more time into that cycle low, potentially giving some sort of a buying opportunity. And remember that even if the price is around 65-ish per barrel of oil, a lot of oil companies are still making very comfortable cash flows. But again, one more thing to consider looking at these shorter term risks is the seasonality. Since 2015, since the beginning of that commodity bull market, we see that crude oil usually does decline sometime into late July, early August. Again, suggesting a potential decline down into the cycle low closer to its average duration. So sometime into the second half of July, crude oil might actually become quite attractive, if it isn't attractive already. But what's more interesting is some other energy sources such as natural gas and uranium, which we'll discuss in more detail together with the members at myfinanceteacher.org. So feel free to join us, feel free to hit that like button as well, and of course share the video with your friends. Have a nice day, bye bye.